Hello friends, topic for today's discussion is piecemeal distribution of cash. In this topic, we are going to understand the following concepts. What is piecemeal distribution of cash? How to prepare statement showing piecemeal distribution of cash? In which order we need to make payment when we distribute the cash to various liabilities? What is contingent liability and how to account for it, then what is surplus capital method and what is maximum loss method. Friends, let us understand what is piecemeal distribution of cash. So here, as per the definition of piecemeal distribution of cash, it is the process of distribution of cash as and when it becomes available. Okay, so basically the process of distribution of cash as and when it becomes available is called piecemeal distribution of cash. From the above definition, it is clear that it is a process of distribution of cash when it becomes available. And this process of distribution of cash is related to the dissolution of partnership firm. To understand the concept of dissolution and how the assets are realized and how the payment is made in parts or pieces, let us discuss the following balance sheet. Here we can see the balance sheet uh, of ABC as on 31st March 2021. Suppose on this date the firm decides to dissolve its business. Okay, it means on 31st March 2021 the partners ABC they decided to dissolve their partnership firm. So here in balance sheet we can see the liabilities include capital accounts of partners. Along with capital accounts there is a bank loan, creditors, income tax and bills payable. Okay, these liabilities are there. And on the asset side we can see land and building, machinery, furniture, typewriter and cash balance is there. Okay, now as this firm is being dissolved, so it is necessary to sell off all the assets and pay the liabilities. Okay, so here if this firm get a buyer who is ready to purchase whole business or whole assets of this partnership firm, then it is possible that all the assets can be sold on the same date and payment can be made on the same date to the liabilities. But in reality it is not possible to sell all the assets on the same date, because in order to get good price the assets are sold when they have demand. Hence assets are sold in parts or pieces and cash generated from sale is immediately paid to the rightful claimants. Therefore cash is distributed in pieces or parts, and the whole process is known as piecemeal distribution of cash. So, basically, this topic is related to dissolution of the partnership firm and payments of liabilities. Right. So, it is clear now that at the time of dissolution of partnership firm, when assets are sold, it is not possible to sell all the assets on the same day. So that's why it is possible that suppose in case of this firm ABC, where ABC are partners, and here assets are land and building, machinery, furniture and typewriter. So first it is possible that firstly firm gets a buyer for their typewriter, and it is possible that in first realization they get 10,000 rupees. Okay, so here question arises that whom to pay this 10,000 rupees first. Okay, for that to make payment to the various liabilities, because on the liability side we can see the along with capital accounts of partners, bank loan is there, then creditors are there, income tax is there and bills payable. Okay, so these four liabilities are there, and when we have cash, then whom to pay this cash first, these questions arise. But This question has been solved in the Partnership Act 1932 itself, right? So to show the distribution of cash, uh, we have to follow the particular order. And as per the Partnership Act 1932, liabilities are paid in the following order. It means we have to follow this order for the payment. Okay. So firstly, we have to provide or paid for the realization expenses or dissolution expenses, because the firm is going to dissolve and assets are being realized. So whatever expenses are there for dissolution or realization of assets are need to be paid first. Then secondly, we have to pay the preferential creditors. Preferential creditor includes all government dues and various taxes like income tax, sales tax, etc. Okay. Then thirdly, we have contingent liability. So students, contingent liability is not actual liability. It depends on the happening of certain event in the future. Here we can take the example of employee compensation. If employee has make a claim in the court for the compensation against the firm, then it is possible that the employee can uh, win the case in the court, and firm may need to pay the compensation to the employee. Okay, so it in particularly in cases where dispute is there, there can be contingent liability. So this liability arises on the happening of certain event in the future. It means outcome of the event in the future. So it is not actual liability at present, but it may arise. So that's why these types of liabilities are considered as contingent liability. And while distributing the cash, if contingent liability is there, we need to set aside the amount required to pay that contingent liability. Okay, so basically here we need to make provision for that contingent liability and set that much amount, right, for the payment in future. And if liability happens in the future, so actual liability and amount which is set aside is set up against, and if there is any surplus, it is added back to the cash balance of the firm, right? So now I hope this concept of contingent liability is clear. In simple word, it is a liability which may or may not arise in the future. Okay, but while making piecemeal distribution of cash, while preparing the statement showing piecemeal distribution of cash, we have to provide for this contingent liability, right? Then next, preferential number in the order of payment is of the secured creditors. So secured creditors are those creditors to whom the firm has given uh, an asset as a security. So those creditors are known as secured creditors. Those secured creditors has right to sell the asset in open market and recover their dues. Okay, so at this stage, secure creditors are paid, and at next stage, at the fifth stage, unsecured creditors are paid. Unsecured creditors include creditors, bills payable, bank overdraft, bank loan, loan taken from the partner's wife, etc. Okay, so all these are considered as unsecured creditors and paid accordingly. At the sixth number, partner's loan is repaid. Okay, so in order of payment, partner's loan is paid at the second last stage, and at the last, the partner's capital is paid, because partners are the owner of the partnership firm, and if there is a loss, that loss has to be bear by the partners. So that's why partners capital is always paid at the end of the process of piecemeal distribution of cash, right? Now, to understand the process of piecemeal distribution of cash clearly and how exactly the statement is prepared, we are going to discuss one practical example related to the piecemeal distribution of cash. And basically, it is the question is related to the dissolution of partnership firm, where we have to distribute cash as per the surplus capital method. So here on the screen, you can see the question. Let us understand the questions and then we will solve the question. So here question says A, B and C are partners in a business sharing profits and losses in the ratio of 3s to 2s to 1. They decided to dissolve the firm on 31st March 2021, on which date their balance sheet was as under. So this balance sheet is here, and the partners decided to dissolve the firm on 31st March 2021 itself. Okay, so here in the balance sheet on liability side, we can observe the capital balances are there, where A's capital is 60,000, B's capital is 48,000, and C's capital is 30,000. So total capital of partners is 1,38,000. Then liabilities includes creditors and income tax is there. Okay, students, this is a simple example. This is indeed our first example related to this topic. So that's why I have taken a simple example to understand the concept of piecemeal distribution of cash. Okay, on the asset side, we have three assets: land and building, furniture, and cash balance is there. Okay, right. So now, as this firm is being dissolved, the assets are sold. So below the balance sheet, it is given that the assets were realized as follows. So first realization uh, was of rupees 30,000 and second realization was of rupees 48,000. So here assets are sold in two parts or in two installments. And further, the question says prepare statement showing piecemeal distribution of cash as per surplus capital method. So here we have to prepare the statement showing piecemeal distribution of cash as per surplus capital method. So friends, see here we have mainly three liabilities: capital accounts of the partner, creditors, and income tax. These are the three liabilities. And assets are sold in first realization and second realization itself. And at the beginning or in the balance sheet, we can see there is a cash balance of 16,000. Right. So here, as we discussed that while making payment to liabilities, we have to follow certain order which is given in the Partnership Act 1932. So as per Partnership Act 1932, we have to provide for the realization expenses. But here in the question, there is no word about the realization expenses or dissolution expenses. Okay, so first point is not there. Then secondly, in order of payment, it is given that we have to pay for preferential creditors. So we have already seen here that preferential creditors include government dues and taxes, all kind of taxes, right? So here we can see the income tax is there, right? So here income tax is there. So in this particular example, we have to pay first income tax, then next liabilities creditors. So we have here discussed and understood that creditors are unsecured creditors, so they are paid after the preferential creditors. And in the balance sheet we can see uh, there is no another liability apart from income tax and creditors. The capital accounts are there. So in order of payment, capital accounts are paid at the end. Okay, so here we have to make payment first to income tax, then we will pay creditors, and then we will pay capital accounts. It means we will pay remaining amount to the uh, partners of the firm, right? So now we are going to prepare a statement showing piecemeal distribution of cash. Here you can see the format of statement showing piecemeal distribution of cash. So here, as we have discussed that we have to pay income tax and creditors only. So because of that, we have two columns for those third party liabilities. But student, just first try to understand that how this statement is prepared. So here we can see that first column is for the date purpose, then second column is for particulars, and then third column is for cash available. Okay, so these first three columns are fixed. First column we have to prepare it for date, second for particulars, and third column is for cash balance or available cash. And then we have to make column as per the liability. So in this our current question, we have only uh, three liabilities. As we have already discussed it, we have capital accounts of the partners, creditors, and income tax. So as we have discussed that we have to pay income tax before creditors because it is considered as preferential creditors. Okay, so after cash balance, we have to make column for income tax, then we have to make column for creditors. Okay, and lastly, capital accounts are recorded in three columns as capital account of A, capital account of B, and capital account of C. Right, now first, as we know that date of dissolution is 31st March 2021. So we'll write date of the dissolution in date column, and then in particular column we are going to record the balances as per balance sheet. Okay, so here we can see the balances as per balance sheet. So we have made column for cash, then for creditors, income tax, and capital account. Okay, so one more time I would like to tell here that uh, in this process of piecemeal distribution of cash, we have to pay the liabilities, right? And that's why make sure that you make column for every liability in a order which is given in the income tax, uh, which is given in the partnership act itself. Okay, we have to follow that order while making payment to various liabilities, right? Now as we have already prepared this statement, students, if you haven't prepared this statement yet, prepare this statement in your notebook, and we will start uh, the solution of this question. Okay, you can pause the video and you can make the statement, but try to solve it along with me so that you can understand the process of piecemeal distribution of cash properly. Right, now let us record the balances as per balance sheet. So first we have to record the cash balance. So here in balance sheet we can see the cash balance is of rupees 16,000. Right. So first we'll record cash balance 16,000. So here record the cash balance of 16,000. Then second column we have made it for income tax. So as we all know that the amount of income tax which is given in the question is rupees 5,000. So here we'll record amount of income tax as rupees 5,000. Then the we have to record the amount of creditors. So amount of creditors is 10,000. So in this statement we'll record the amount of creditors as 10,000. Right, now we have to record the capital accounts of the partners, capital balances of the partners. So here we can see A's capital is 60,000, B's capital is 48,000, and C's capital is 30,000. So here we'll record the capital balances as A's capital as 60,000, then B's capital balance is 48,000, and C's capital is 30,000. Right? So see friends, we have recorded all the balances as per balance sheet. A's capital 60,000, B's capital 48,000, and C's capital 30,000. Then creditors and income tax. Right? right? So let me show you in this full screen. So we have recorded the balances as per the balance sheet. Now we have cash balance, available cash of rupees 16,000. Then we have to pay income tax, creditors, and capital accounts of the partner. So here, as we have already prepared column as per the order of payment. So first we have to pay the income tax. So amount of income tax is 5,000, and we have 16,000 of rupees as a cash. So now we can pay the whole amount of income tax here. Okay. So now let us pay the amount to income tax. So here in particular column we have to write like this, less, because we are going to pay the amount from the cash balance. Okay, so less paid income, and out of 11,000 we are going to pay 10,000 rupees. In income tax column the balance is nil, and this 10,000 rupees we are paying to creditors, right? So after payment of this 10,000 rupees to creditors, we have to record the balances. Here we are not going to pay any amount to capital balances, so we can uh, give here dot, or uh, we can keep that column blank, that, right? So here look at this step. uh, After payment of creditors, out of 11,000, 10,000 is subtracted, so we'll have 1,000 rupees as cash balance, and creditors liability will be nil, right? So in cash column I'll have 1,000 rupees, and in particular column I'll write like this, balance as income tax already paid, so it is nil. And now the creditors is also nil, but the A's capital is 60,000, B's capital is 48,000, and C's capital is 30,000. So these are the capital accounted balances which we have to pay. So look at it, this state carefully, friends. Now the available cash is 1,000 rupees, and all the third party liabilities are already paid. Only capital balances are there, or capital accounts are there. It means we have to distribute available cash amongst the partner. But here question arises that this 1,000 rupees which is available with us as cash balance, to whom this amount is to be paid first, right? And for that, to distribute the available cash amongst the partner, we have two methods. Okay, at the beginning of this topic, we have discussed that in this topic we are going to study and understand these concepts. So the two methods which are at the end of this point, surplus capital method and maximum loss method. So these methods are used to make payment to the partners or partners capital. These methods, that is surplus capital method and maximum loss method, has nothing to do with the payment of third party liability or outside liability. These methods, surplus capital method and maximum loss method, are only useful to make payment to the partners, right? Partners capital. So here we are at this point where we have 1,000 rupees as a cash, right? 1,000 rupees as a cash, and the capital, we have to pay the capital balances. We have to distribute this amount amongst the partners. But here, to distribute this amount, we have to follow either surplus capital method or maximum loss method, right? To make payment to the partner. So now let us look at the question. So on the screen, you can see the question, and at the end of question, it is mentioned that prepare statement showing piecemeal distribution of cash as per surplus capital methods. So it means for the payment, we have to follow the surplus capital method for the payment to partners capital, right? So as per surplus capital method, we have to find out the surplus capital and then we'll make payment to the partners, right? I hope now it is clear that when the surplus capital method and maximum loss method, these are used, and what is use of this method, right? So to make payment to the partners, first we have to find out the surplus capital of the partner, because we have to distribute cash amongst the partner as per the surplus capital method, because it is mentioned in the question, right? So for that, we have to prepare a statement showing surplus capital, and this statement is prepared generally in this format, where one column is related to the particular and other columns are of the capital account balances, right? Now let us prepare this statement and understand how to prepare this statement exactly. So for that, in order to understand the preparation of statement, in particular column, I am giving number for every step. So for first step, I have given a number one in first column under the particular title in second row. So here on the screen you can see. So here at the first step, we have to record the capital balances.